Up next on the Rebel's Edge, the most important stock in the world, according to Goldman Sachs. Bang! Welcome back to the Rebel's Edge, folks. I am Jon Najarian, and he's Pete Najarian. And we're about to break down for you a whole bunch of earnings because the most important stock in the world, Pete, Nvidia, just reported blowout earnings. And I can't wait for your take on it.
Unreal, John. I mean, just everything you'd ever expect. I know we got to start off with the macro.
Let's dive into macro, Pete. So the macro minute today, I guess it's that the world was saved by Nvidia, Pete. That's my macro today.
Well, John, earlier this week, we were talking about exactly this. And I said, so this week, what's more important, the Fed minutes and meeting and all the rest of that? Or is it the earnings from Nvidia? Well, clearly, we found out today, we already knew, but we found out today it's Nvidia.
And we'll dive deeper into that stock in just over a minute. First, we've got fantastic future. NASDAQ all-time high, or at least according to some, the all-time high hit today. And the NASDAQ's up some 2.5% at mid-session. I'm going to say NASDAQ futures are the fantastic futures today.
I like it. I think you're right. I think I'm right as well. How about the 10-year, John? I haven't seen this violent a move as we have out of that. On February 1st, we were at 381. Today, we're at 433. This move this month has been extraordinary. And despite the fact of where that is today, look at the NASDAQ up nearly 400 points. And obviously, we know one of the triggers is the very first stock on our list today. And we'll be talking about that right now.
Yeah, exactly. Let's dive into that one, Pete, because we don't want to bury the lead, folks. Nvidia. And by the way, if you'd like to get our book so that you could trade $700 and $800 stocks with just a lot less than that in your portfolio, get your copy of the book, which is, of course, it's not an option.com. It's not an option.com. You can claim your free book on that site, folks. It is a completely free book. Or you can go to Amazon and spend $27 or $28 for it. Your choice.
Either way.
Either way. You know, it depends what kind of a shrewd shopper you are. But, Pete, Nvidia's numbers, absolute blowout. They were looking for, I think, 21.8 billion, which would be, monstrous in and of itself. But instead, they're guiding to $24 billion. So blowout earnings, top and bottom line, and guidance going forward that's at least 11 or 12% better than the street expected.
And John, when you look at the gross margins of 77%, you also look with the gains that stock has made, which is extraordinary, right? I mean, it's up 200% in the last 12 months. That's a major move. That is an absolutely incredible move. It's why there's so much focus on it today. But despite all of that, you know where the PE is right now because those earnings have gone up along with this whole thing? 33 forward PE. That isn't expensive, folks, especially for something that's growing the way this thing is growing. Absolutely extraordinary. I look across, there's really only one thing that you could say that was a negative about this last quarter, and that's talking about the China. In terms of some of the data, the revenue there, that really wasn't quite there. We're seeing a little bit of a pullback on that. But outside of that, John, this is a pretty extraordinary set of numbers they've been able to put up. I mean, it's something like we've never seen before. All-time highs, obviously, today. And the interesting thing has been some of the options activity, one of which was just that we've been talking about these very deep calls that people are buying, which basically are a surrogate to stock. Well, just about a month ago, somebody bought 30,000 of the March 500 calls, John. They were rolling it, and they keep on doing this, and that was with the stock at 560. Well, you're going to see some more rolls because the people who have that on are very, very happy, very, very smart. They got a hell of a lot of money, and I think they're going to roll again.
Well, Pete, we did have unusual activity beginning of February, too, in this one. And take a look at what they were buying there, folks. And they bought a deep in-the-money call. They paid $142 for it. But I think they're pretty happy, Pete, with the stock jumping by better than $100 today and becoming what Goldman Sachs says is the most important stock on earth. That's what they said. Well, they proved it last night after the bell. And the only negative I saw, Pete, was some of their success might be so big that maybe they're going to hurt their data center chips. Because if AI can do an awful lot for people that they don't need as much in the data center, but I guess they'd be willing to do away with that for all of the AI-related stocks, which we're going to hit, in just two more stocks. We're going to talk about one of the big beneficiaries other than Nvidia. But let's dive into Rivian, Pete, because this one just fallen apart. I mean, consumer discretionary automotive, you guys know what it is. It's an EV play, and they make some beautiful trucks. I'm sure Pete's out there probably has his deposit down for one of them, but they said EPS below estimates, Pete. They said revenue below estimates. They said, you know what? We're going to make fewer vehicles too, so we don't lose as much money. I mean, honestly, folks, when you read between the lines, Pete, that's what they said. We're going to produce 57,000 vehicles instead of 80,000 vehicles because you know why? We lose money on every single one.
John, they have just absolutely folded the tents up, and it's a big problem. I think bigger than a lot of people recognize. It's why they have such a high short interest. It's anywhere, call it between 12 and 18%. And John, the cash burn at $5.25 billion, that's their cash burn. That's a real problem. So that's why this stock today hit 52-week lows. It got all the way down towards $11 a share. High end of 52 weeks is 28. You understand when I say this thing is in trouble. And I think there's still more trouble in front of it, even though we're seeing call buying today. For those who don't understand options, the only reason I would say that would be this. Maybe that's a hedge for the shorts to be able to say, you know what, we're going to buy these calls in case we're wrong. But if this stock continues to tumble, we're going to eat that, but we're going to eat even bigger with this stock going even further to the downside. There's a lot going on here, John. That number is terrible. And you talked about it. The production number from 80,000 to 57,000. That's a terrible number. That's something that should be going up, not down. It's going everywhere in the wrong direction for Rivian.
Yes, it sure is, Pete. Well, now let's talk about that other big beneficiary of artificial intelligence, or AI, and that is SuperMicro computer. I mean, the name itself tells you that they do something pretty special, at least according to them. But Pete, you know what they mainly do? Servers, rack systems, and so forth. In other words, all the stuff that supports AI. They're not really a pure AI play, but they're the picks and shovels part of it, much like ARM Holdings, ARM, is. So these guys are going to basically put out a $1.5 billion note. The stock is up 750% in the past year. 1 year, 750%, Pete. And how about this one? It's up 223% in the last month. Not 100%, 220%. I had to double check the numbers. It is crazy how much money is pouring into this stock, Pete.
Well, and they're doing it for all the right reasons, really, John. When you break it all down, you look, and you said 750%. Now, let's remember, we just talked about what Nvidia had done, 200% in the last year. That's an ungodly number. The two of us were both shaking our heads. This is 750%. That one's another one we should be shaking our heads, and we are. Huge short interest in this one, John. We're talking about 9 to 11%. That certainly is a factor. That's why when we see some of these unbelievable moves to the upside, they are numbers like we have never seen before. Here's the crazy part, though. This is a company that has figured it out. They make some money. They're the supplier for AI, as you just pointed out. John, their earnings went from 326 all the way to 559. So when I looked at the PE, because I was looking at, do they even have, any profits? Actually, they do. And when you look at that and you look at the numbers, John, the forward PE for this company, if you all extrapolate some of the other things out, 36. So again, very similar to Nvidia, even though it's made this move, the strength and the growth of what they're doing right now and what they're able to execute is at such a high level that these things are not overpriced, relatively speaking. So there's a lot of companies out there, John, that are trading at 60, 70, 80 times earnings. That gets a pretty much lofty level. These are not in that lofty category right now.
Yeah, it's a fantastic day to be long either of these two stocks. Although I'll give a tip of the hat to Nvidia because it's up 100. Meanwhile, SuperMicro, Pete, is up 201.
That's all.
That's all. $201 a share right now. All right. And by the way, folks, again, thank you to our friends at SIBO Global Markets for letting me shoot here from the floor. All that movement in the background back there, those are all the men and women who are trading still in open outcry, Pete. An awful lot trades electronically, but an awful lot of what you see behind me is trading through open outcry. All right, let's take a look at Fiverr, Pete. So this is information technology, basically an online marketplace for freelance services. It's another company out of Israel, and Israel has hit it and hit it and hit it with these tech stocks. I mean, they have just blown up. And one of their biggest wins it's almost a decade ago now, was Waze, W-A-Z-E, an app that a lot of us use every day. But they have just been growing in the tech space like crazy, Pete. Revenues, a little bit short of estimates, Pete. And so maybe it's time for them to, take a little breather, I guess. But I would not be saying Fiverr is done. I think a lot of people use them right now and probably a lot more in the future.
Yeah, it's interesting, John, because the stock is getting hit pretty hard right now when you look at it, when you really look at it. Their earnings were great. I mean, a year ago, they were 26 cents. You know what they gave us this time? 56 cents. They were looking for 52. So they did beat there, but you mentioned revenue. That's where they did miss, and that was an issue. That's what people seem to be focused on right now. It is pretty interesting. The stock is near the 52-week lows, trading them, but last I looked around 23. I think it's 20 to 46 is the 52-week low and high. So it's an interesting one for sure, and that might be an opportunity. It's one of these where I think we all have to look at it a little bit closer. They had some numbers that were very positive, some other numbers that were pretty negative, so a very mixed sort of a report. But I take a look at this one and think, you know what, going forward, this is a company, because it's gotten beat this bad so far, John, I think it's got a little bit of room to the upside. So I'll be watching this one very closely.
Yeah, this is one, Pete, that I think does merit some attention. And it's not just a pandemic, although they got a boost from the pandemic, obviously, because remote work and so forth. You can go on Fiverr and find people to do a whole variety of things, everything from photoshopping to creating logos and all kinds of things. So they're a great connector, but obviously in at least this past quarter, they didn't connect with investors very well, Pete. All right. Well, let's see. Other than just reminding people again about the book, Pete, the free book, you can claim it, folks, by going over to itsnotanoption.com. That's itsnotanoption.com and claim your free book. It's the #1 business book out there in 2024, so go check it out. All right. What do you got as far as your sports today, Pete?
Well, John, I think it would be fun to just cover one last time before we get to the combine and everything else. Just one more, the mock drafts that are out there, everybody's got them, right? I mean, and Mel Kiper's one of the most famous of them all, but everybody's got something, every network, everything. But I thought it would be interesting to look at the top 5 because right now, you being in Chicago, and you were a Chicago Bear linebacker, I was a Minnesota Viking linebacker and Tampa Bay linebacker. Tampa's no longer been in that top 5 for a while. They've actually had some really good years, and Chicago made that trade last year with Carolina. Carolina decided to go after a very, very small quarterback with small hands and everything else, and that didn't go so well. Now they're debating again, should they go with the quarterback down in Chicago this time? Caleb Williams, maybe. He's looking pretty interesting as the #1 pick, and that might get traded because there are so many different teams right now, John, that are in need of a quarterback. And then you've got Drake May next from North Carolina. Then you got Jaden Daniels next out of LSU. You've got 3 quarterbacks that people are projecting to be the first 3 quarterbacks to be taken in the draft. Now, that's pretty interesting. You've got Atlanta, the Raiders, the Vikings, Washington, New England, Giants, and Pittsburgh. All of them need a quarterback. So it's going to be interesting to see what kind of trades are done, and I'm not sure how it's all going to fall out. I think this, John, I don't think that the Bears are going to take that pick. I think they're going to trade down. They've already got the 9th pick anyway, so they can take whomever it is that they choose to be their top pick there. but somebody's going to want to move up because Caleb Williams, whether or not we like him, don't like him, whatever, people have fallen in love with this guy. He's had some pretty amazing numbers that he's put up over the last couple of years. I think it's going to be pretty interesting. So my question for you is, if you're the GM of the Bears, do you trade it? Or do you take Caleb and say, you know what, I'm going to get a lot of draft capital. I'll just get rid of our present quarterback and see what I get for him, Justin Fields. What would you do?
Well, and you bring up that big point, Pete, that obviously, especially with a team as cheap as the Bears, notoriously cheap. I mean, Dick Butkus said they throw around nickels like manhole covers. Or that might have been Ditka. I'm not sure which, but one of them said that about George Halas. And he still loved both guys. He hated them for a while, but he came back to love them. And they are notoriously cheap. So if you draft Caleb Williams, like Pete said, folks, the part that he understands so well is that you've got a salary cap. You've also got a salary minimum. If you don't spend it, they take it. So you could create some salary cap move by moving Fields, who's going to want big money, probably hasn't had the performance that deserves the big money, but you could trade him now. And one of the places that they talk about all the time, like Pete said, is Atlanta. They need a quarterback. Shoot, in my mind, Pete, the Patriots need a quarterback because I don't think Mac Jones is the guy. But anyway, then you get a quarterback that for 4 years, you're locked in at a really cheap rate. And he can bitch and moan all he wants about. He wants to own the team. He wants to be paid, whatever, Mahomes money. You don't get Mahomes money until you've been in the league for 4 or 5 years, Pete. Then you get that big contract. So I think he's the fact that the Bears haven't had great success with Fields, even though he's shown flashes of greatness, and I think he's a great quarterback. I think they deal it so they can basically cut the amount of money. So I think that's going to be a primary driver here, Pete. And as much as the quarterback from USC ain't going to like it, I think he's going to be stuck.
Yeah, and he's not going to get a percentage of the team like he thought he was going to. That guy's complete lunatic, and that was a terrible thing for him to have said. That's one of those things where somebody should be his coach and say, hey, look, if you're thinking about something, tell us ahead of time so you don't say it if we don't think you should say it. All right, next up, John. We got some draft sleepers, but I decided to go in a different direction. We can maybe cover a little bit more. Obviously, we got the combine next week. But I think what's really interesting is the FCS schools. Now, there are some pretty interesting players that come out of there. As a matter of fact, right now, South Dakota State, who's won the national title a couple of times, they've got 12 people right now playing in the NFL. It shows you that there are athletes everywhere, and they have a lot of tight ends, some good quarterbacks. They've got a couple of offensive linemen, a few linebackers. They really kind of cover it all. So right now, John, I was just looking at South Dakota State to see, all right, do they got another group this year? And they do. They got 2 offensive linemen. A lot of people I think are going to be eyeing up. Both are about 6'6", about 3 1/4. One's more of a center guard. The other guy's more of a tackle. But I think that should be pretty interesting. And when I say sleepers, what I mean by that is I think these are the guys, whether they get drafted or not, once they go to the combine, they will get signed by teams. And more than likely, they're going to outplay people, and they'll make those teams. That's what they have become. I mean, you look around the league and you see all these tight ends that came out of South Dakota State. They got another one, John, 6'7", 260 pounds, Zach Hines. Now, the kid's got 75 catches, 980 yards in the last 3 years, 17 touchdowns. That's pretty impressive numbers for a tight end, guys. And that's the kind of guy who, even if he's not drafted, he will be on a team. He's got the size, enough speed, he can block, and he's just one of these guys who's a great football player. It's amazing how much they're doing right now in the state of South Dakota, even at the high school level, that's putting these kids either at University of South Dakota or South Dakota State University in this case. Unbelievable. They got a running back, John, Isaiah Davis. He's only averaging just short of 7 yards a carry for a career, so it's not so bad. I think that we'd like to take a long look at him. We've already got Pierre, the running back before him a year or two ago, who's already in the NFL playing and doing pretty well. They've got a whole group of guys that could get into the NFL, John, and it's really, truly amazing. And they are sleepers because How many of us know anybody at Montana, at South Dakota State, North Dakota State? Some great coaches, some great players, and I think it's pretty exciting what's happening right now at South Dakota State.
Well, Pete, we both know that, like you said, they've won some national titles. We both know they've put out some pretty special players into the NFL. Players, in some cases, that have taken people all the way into the Super Bowl. Now, one of the things I'm looking at here, Pete, for South Dakota State is they open with Oklahoma State this year. That's the first game, folks, August 31st. It's already on their website. And that is, I tell you what, I guarantee Oklahoma State is not looking past them.
They better not. And I'll tell you what, you always got to prepare for every single opponent you've got in any part of college football because you just never know. And it's just like the NFL, not for long. Well, you'd be not for long at the college level if you look past some of these different teams and some of the players that are so good on some of these different schools and doing an amazing job at every level. So I guarantee you this, Oklahoma State won't be looking past South Dakota State in that opening game. Folks, have a great day. We really enjoy you stopping in, taking a little look at us. I see John's back right now. He's the CBOE. John, you got a little screaming going on behind you. They're getting a little bit riled up on a Thursday, huh?
Yeah, well, again, you talked about volatility, Pete. That's what a lot of those people behind me are trading, S&P 500 and volatility. And there's a lot more interest in both today, Pete.
Yeah, should be a lot of fun. Well, folks, have a great weekend. John and I will be back on Monday with the Rebels Edge once again. We'll have our stocks, we'll have our macro, we'll have our fantastic futures. We'll throw in a little bit of sports. We got that sports side to us as well. Folks, have a great weekend.